Toronto's real estate problem is not interest rates. It's not immigration, and it's not psychology in isolation. It's financial excess, and the bill is still being paid. To understand where Toronto housing is heading next, you have to understand what happened in 2021 and 2022. That period was not a normal housing cycle. It was a complete abandonment of discipline. Buyers overbid on every housing type: condos, townhouses, detached homes, not because the economics made sense, but because prices were rising and money was cheap. Fundamentals stopped mattering. Rents didn't matter. Income ratios didn't matter. Cash flow didn't matter. Only price momentum mattered. That is the definition of excess. Ultra-low rates turned leverage into a weapon. Buyers stretched themselves to the limit. Investors assumed appreciation would cover every mistake. Risk was dismissed as something theoretical, something that applied to other people. When asset prices move too far above what incomes, rents, and long-term affordability can support, markets don't correct politely. They don't stop at fair value. They mean revert. And mean reversion is not gentle. Mean reversion doesn't negotiate with homeowners. It doesn't pause because prices already fell. And it doesn't care about narratives or hope. Toronto real estate didn't just overshoot, it overshot violently. History is very clear about what follows periods of extreme excess. Prices rarely stop once they begin correcting. They tend to undershoot, especially in markets built on leverage. That's the part many people are still ignoring. Prices have already fallen meaningfully from the peak, but based on historical housing cycles, affordability metrics, and rent-to-price ratios, another decline of roughly 30% from current levels is entirely plausible before the excess is fully cleared. That is not a forecast pulled from emotion. It is how mean reversion typically works after bubbles driven by cheap money and leverage. This is why 2026 is unlikely to be a recovery year. Mean reversion doesn't operate on optimism or timelines. It continues until prices reconnect with economic reality. We are not watching a crash. We are watching normalization after mania. And normalization after excess is never quick and never comfortable. Conclusion: Toronto's housing market is not being punished. It is being corrected. The excess is not fully cleared, and until it does, the adjustment continues. This is the cost of abandoning discipline. Subscribe to Financial Excesses, where we document bubbles, leverage, and what happens when markets finally send the bill.